Yeah, so actually it is stocks and ETFs, and I came with some examples that we do because we were out of stocks because the chart I'm going to show you when the cycle stops on the Dow Jones. The problem is, if you have a 5, 6, and soon 12% inflation, you lose money if you don't do anything. So you have to find places where to make some profits. So since we're in a bull market for commodities, people have to try to shift their attention and follow us on the ETFs that follow, let's say, crude, wheat prices, corn prices, and etc.
What about natural gas, the good old widow maker? Is there still potential in that in the U.S.?
Yeah, definitely. It's just in a trading range now, but definitely it's going higher. Why is it called the widow maker?
Well, I thought you told me that, and it was because if you trade nat gas, you often wind up jumping out the window and turning your spouse into a widow.
Okay, I got it. That'll be a warning over here in this household.
Well, it's so difficult to trade because the weather can change on a dime, and then expectations for nat gas, just go out the window.
Well, we will work with cycles, so we're not involved in weather. Although that seems very strange, but the weather follows the cycles.
Yeah, no doubt. So time to be out of growth stocks, out of your Amazons, your Facebooks, and all of those, huh?
Well, just because we happen to talk now, we're very close to making a more serious bounce. So we're not short anymore because the short-term cycles bottom between the end of this week and next week, and we could have a reasonable bounce. Not that the bear market is over, but definitely don't want to be short right now. And if you're a good trader, you might go long.
Okay. So, but the real actions in commodities, as we've seen, that I guess kind of intersects with the war cycle, right?
Right, but that actually has nothing to do because the commodity we bought already before the war started. The inflation started already before the war started, and the crude price already was very high before the war started. It's one reason why a lot of people never understand how markets work, because of course there's always something that comes out, a news item that triggers it, but you have to see where the move started, and then there was no question that there would be a war.
Okay, so oil been a huge performer. It got up over $137 the other day. Can it still go higher from here?
Yeah, there's a short term. We long from 72, so that's a huge way up. A lot of people play it by watching our USO because a lot of investors don't like to play commodities, so they can play the crude oil price by playing USO, which I will show you later the chart. Right now we're at the short-term high for crude, but the bull market is not over. And we had two price targets. One is around $150, and if it breaks that one, $250.
Wow, a major disruption for the world, isn't it?
Well, yes and no, because if you look how much oil is needed for the GDP, it's much less than it was 20, 30 years ago. So actually less oil is needed these days to keep everything running than before.
Yeah, well, we've had this huge switch over to nat gas, which I don't think markets have appreciated, and certainly investors haven't. 30, 40 years ago, buildings used to switch between nat gas and oil, depending on which was cheaper. But for the past decade, nat gas has been far cheaper on a BTU basis.
Yeah, but soon that's going to be finished also.
Really? So what can nat gas go up to?
I did not calculate it for now. I was too busy with crude oil, but next time I'll be ready.
Okay. Well, we're going to follow it for sure, because I've been a huge bull on natural gas. For the past 6 months, it hit 650 and then it pulled back, kind of been in a little consolidation since then. But who knows what can happen now?
Yeah, but longer term cycles are up.
Okay. So why don't you share with us some charts? Tell us what they're telling us.
Well, the first one I want to show you is a Dow Jones chart. As you know, is we don't believe things move at random. We work with the bottoms and tops in time, and also price targets. So what you see here is very interesting. I took 3 of the most important cycles. And if you go back over here in 2007, you see that they all topped at the same time.
Yes.
And now the first times in 2007 over here is that's why I went out of the market. They all top again at the same time. So that's why I've been saying this down move is going to surprise you more than you think. Now, of course, if some are up and some are down, we have a system that gives you the end result. And usually when we talk, I show you the end result. But in this case, I wanted to show you how it's built. So the computer takes longer and shorter cycles. And the more they top at the same phase, the same time, the bigger the down move. So again, I go back here. This is the only time in 2007. And the only time now was in January when all 3 cycles topped. So it's not a coincidence. It's not because of the war. You can say the war is because cycle topped and something negative had to happen to bring the market down. There's always something going to happen, because even if cycles stop, if nothing negative happens, then markets don't go down. But people forget that actually, you know that the markets are coming down. You don't know why. And don't concentrate on why. Just concentrate on when it's going to happen.
Right. Makes complete sense. And how much lower you think the Dow can go?
Well, for the moment, I don't think it will go much lower. But we can go as low as 15,000.
Wow, that's a dramatic, that's close to 70% decline.
Yes, but it's still, so you don't want to go against the big cycles. So that's why I'm going to show you what we do, playing the commodity stocks, and they're just going through the roof. You just have to change your mindset, because the people will tell you, well, I know about stocks, I don't know about commodities. The question is, how much do you know about stocks and how much about commodities? You probably know the same amount of information. So it doesn't make a difference what you're trading, as long as you follow cycles and price targets and you make a profit.
Right. Okay, so show us the next.
Let's see the next one we have over here. This one is GDXJ.
Oh.
Now, GDXJ is our favorite gold play. If you ask me if it's a stock on ETF, I'm not sure. But there are different ways of playing gold. Some cycles are more easy to see than other cycles. So this one we bought around 41. This is we played this and GLD to play along the gold market. We also along the silver market. But just I want to mention that right now, short-term cycles are topping. So it's more now to take a profit than to go long. I just say that because sometimes people see me coming on and says, oh, I got a tip, we're going long. No, we went long and now we have sell stops in and we think we could have some weakness over here on gold.
Okay. And today,
now the next one is USO. Now, how do we play USO? It follows the crude price. And people who don't like to be in commodities can play USO. And look what it did over here. It's amazing how these stocks go up. So that's why I want to show it to you. If you're looking at the right kind of stocks, the right asset class, there's a lot of profits being made instead of waiting for the Dow Jones stocks or S&P stocks to hit a low and then maybe, play a bounce and then you have to run out again before cycles turn it down again. Mm-hmm. So I show you another one. Okay, so this is it's called SOYB, SOYB. These commodities go through the roof like corn, wheat, soya beans. But for people who don't want to trade commodities, we follow SOYB. And if you see what happens to SOYB, see what happens to the stock, is huge up. And the same thing as we said for the other one. You don't have to trade commodities. You can trade the ETFs, and it's behaving like a stock if you don't like to trade commodities. But the important thing is to be in the commodity stocks.
Got it. Next
one. No, this is another one. This is ATHE. People are doing a lot in Bitcoin and Ethereum. So we don't trade We don't trade the Ethereum, Bitcoin for a lot of people because you need wallets. You know, I don't even know exactly how it works. So we trade ETHE. It's an ETF following Ethereum. And you see, if you think Ethereum goes down and we will short Ethereum, you don't have to play Ethereum. You can just go short this stock. And when there's a low in Ethereum, which is very close now to cycle low, you can go long Ethereum by buying the ETF ETHE. So that's another thing we do, and you don't have to deal with the commodities and the currencies and whatever makes it very complicated for the small investor.
Got it. But you could go to Coinbase, but actually your transaction fees on the ETF are going to be less than they are on Coinbase.
And what happens is that investors are more into these assets, and there's less manipulation going through sell and buy stops than in trading really Bitcoin or
yes.
Of course wheat went up because that's the news, is that 50% of the wheat comes from Ukraine, and of course it doesn't come out of Ukraine, but wheat started to rally the bull market before the war. So there is an ETF called wheat, WEAT, without an H. And that's how we play the wheat commodity for people who don't like to be in commodities. So the thing is to be in the right asset class and not wait till the market bottoms or tops. So now we were in gold, but like I said, I think today even we're selling some of the gold position because the cycle tops. This is actually the way to make a nice profit. You just have to change your outlook because the assets during years don't stay the same. So sometimes it's good to be in industrials, sometimes good to be in tech stocks, and now it's commodity stocks.
And when we had talked last time, you were pretty much saying that the cycle was going to turn, that commodities were going higher. I don't know if you watched nickel yesterday.
I saw that.
Yeah, it was a parabolic move that, nickel prices have been like sideways. They were going a little bit higher, but they're pretty much trading sideways. All of a sudden, boom, it just took off out of nowhere.
I think the big investors were looking for something that didn't go sky high until now, and they found nickel.
Right. And wheat could be the next thing, huh?
Well, wheat is already, we had a price target that had been reached of 1,300 on the future, so we took profit at 1,300. So if you watch what we're doing, then on our cycles and our price targets, you don't have to read the newspapers, you don't have to wait what Putin is going to do, because the assumption is it has nothing to do with the news, which is still very hard to digest, but that's how the big investors make their money.
Right. The cycles create the news rather than the news creating the cycles. So when in doubt, you look at the charts, right?
Right. So when I saw wheat prices go up and I saw there would be a bounce in the bonds, and I saw the market came down, so we could time already when Putin would start his invasion of Ukraine based on these commodities.
Amazing. Really amazing. So when we're looking at charts and we're looking for these patterns to repeat, what's the biggest red flag that something is going to happen in whatever it is, whether it's a stock or a commodity, anything?
Well, when you see the bond market still didn't reach a long-term low, that's based on the Fed and inflation. But when you see the bond market, and it's going to come in a couple of weeks, that will start shooting up, then something is going on because people are going to run for cover. Okay. And when you see inflation that the system says could be 12.5%, something is still going to happen, because I don't think based on the industry, inflation will go that high that fast.
Yeah, because you talked last year when we spoke earlier in 2021, you said inflation was coming. It's going to be around for a while.
Oh, it's going to be around for 20, 30 years. We just started a new wave of inflation.
And then the way governments react, they're going to do things like price controls. They're going to do the worst possible thing at the worst possible time, right? I wrote an article, 8 reasons why wage and price controls are coming. They're going to be as successful as they were for Nixon, right? Right.
It's amazing. Nothing changes. But I think the problem now because of the money that has been printed is going to be worse than in the cycle before. But I think what happened until the 80s, 1980s, is going to happen again. Sky high interest rates and big inflation. So you really have to watch what you do with your money, and you cannot just sit on savings, because now you don't even get anything in the bank. So that's why I brought in all these charts to show that, right now you have to be in commodity charts. It could be that in half a year you have to be in another asset, but you have to know in which asset you're going to make your money.
Right. Yep. Agreed there. So with inflation, with higher interest rates, the global economy, can it absorb 20% interest rates again?
No, of course not. But if you look at the past, a couple of percentages, it can still handle. Even the housing market can handle 5, 6, 7% of inflation. But when it gets above 10, then really, things get very difficult.
And I remember, like, several years ago, maybe 3 or 4 years ago, hard to believe, we've been talking close to 10 years, Charles, but 3, 4 years ago, you said, buy small apartments,
right,
rent them out, vacation rentals. I mean, if you look here in Florida, just last month, or in the past 30 days, real estate prices have gone up somewhere around 10% in most areas. It's shocking. I've never seen anything like it before.
Well, it's like what we call a blow-off market in technical terms, and it's not going to end well. Same thing all over again.
Deja vu all over. So is it time to sell those apartments? And
I think, or if you have a good rental, we said then, if you get the rental, because rents will not go down because the people cannot afford to buy an apartment anymore. And if you have time to sit it out, it can go down for a couple of years, but then it will get back to the high. And in the meantime, where are you going to put your money? Maybe the best thing is to put it in rent.
Yeah, well, I mean, I look at my home and I'm up so much, but the thought of like moving again really holds zero attraction to me. I'm willing to ride the roller coaster to avoid moving.
Well, there's also an emotional effect. I have the same thing. My house in Amsterdam is up huge, hundreds of percentage, but it's very difficult to sell.
Yeah, and then that's a lot of, because housing decisions really aren't economic decisions usually. I will say I knew this inflation was coming, not just from what you said, but from experience, and I felt like I had to buy a home. This was over a year ago. I had to buy it or I was going to be left out.
Yes, thank God I bought it 20 years ago, so that's a big difference.
Yeah, big difference. So
anyway, if you look at our website, charlesnenner.com, people can take a look for 4 weeks. They can get it for free. And like I always says, even if you don't want to follow it, just take a look for a couple of weeks to understand how investing is really being done by the big companies like Goldman Sachs, where I was for many years, and not following the media and listen to what people tell you on the television.
Yeah. Yeah, well, by the time it's on TV, it's too late, right?
Yeah, but you should know that the people who come on television are the people who come to give you advertisements. So they only bring people who have a certain idea, because people that say the opposite, you understand, they will not advertise, they're not invited. So they're always in the same direction. It's always when we're going to buy. It's never when we're going to sell. I never heard that. It's always, is it the buying opportunity?
Yeah, CNBC. I've never heard the Squawk Box 20 guys get on and say, sell, sell, sell.
Right.
I mean, I guess the day they do that, you need to be buying, right?
And because they're not going to come back. They're going to be, they throw them out.
What a world. What a world. So give us some hope for some optimism here, Charles.
Well, I wish I could. It's going to be a very difficult time to save your money. You know, I'm Dutch. We don't even always think how to make money. We try not to lose money, but with the inflation and the low interest rates you get in the bank, you have to do something. And if you say I'm there for the long run, if you have an inflation of 10% and the market will come back in the next 6, 7 years, you're in trouble. So especially, I for years have been saying go out of the bond funds, because the inflation is not going to stay, 1%, and you're never going to get your money back. So if companies make profits in a couple of years, the price of the stock goes back up. But to get these low rates, maybe not in our lifetime. Well, your lifetime. I'm getting older, but in our grandchildren's lifetime.
Yeah, yeah. It's really, that's what I think about for people looking ahead to the future. You got to do something, and you need to protect yourself, and you really got to invest wisely, which many of you out there, and myself included, haven't done perhaps as well as good a job as we should have done over the years. So go over to charlesnenner.com. Make sure you sign up for your trial subscription. I've been reading Charles's work for years now, and it's always been pretty spot on. Sometimes, like now, more spot on than others. But Charles, you called the gold totally, and so we get a pullback now in gold, and I guess silver. What's your take on silver? Is it going to move?
Well, we had a price target, upside target on silver. It was reached, and if silver closes below 25, then the buy signal is gone also over there. So for the moment, I think we did the first leg is finished. Based on cycles, it will come back, but you have to wait a couple of weeks until the next move up.
I remember when I started doing podcasting, really getting into the financial world. There's a guy, I think his name was Ned Schmidt. He's passed on now, but he said to me in his southern drawl, he said, "Kerry, remember this, things take way, way longer than you ever dreamed possible, but they happen much faster than you ever thought they could." And that's the kind of situation we're in now, Charles.
That's the fact. Once a cycle bottoms, it goes so fast. If you're not prepared, you miss it.
Yeah. So precious metals, two things: precious metals, long-term bull market, and what about the dollar?
Short-term, some weakness.
But long-term, it's the place to be. And the dollar has been going up along with gold, which is kind of counterintuitive, but really makes a lot of sense, doesn't it?
Well, yeah, but the euro is the cycles on euro are bottoming. So we just went long today, the euro. We were short and we turned around based on cycles. Don't ask me why that is happening, just based on cycles and price targets.
Hey, well, remember a couple of years ago, the euro crisis, and banks were in trouble, everything else. And yet the euro started going up, and it's been, pretty stable over the past several years. And intuitively you say Europe's in trouble, Russia's expanding, or the war is going to be bad for Europe. It's got to be bad for the euro. But again, this is a case where the headlines don't tell the real story.
Well, it does. It comes afterwards, because I'm just suggesting, I don't know if that's going to happen. The difference in rates is still good for the dollar. I mean, I have money in euros, and it costs me 0.5% just to keep it in the bank.
For the privilege.
But if the European market is going to have higher interest rates, then the difference becomes less. So insiders probably know already that it's going to happen, and they start already accumulating the euro. Now, if you wait until the news come out, it's too late again. So that's why I say you have to. The cycles know it's coming, and later we'll see why. But you have to be there on time.